Hey guys, just a quick little system here I wanted to show you using one simple moving average, and we're using it as support and resistance, and it's the 110 exponential. Have a look here, 110. So what I'm looking for is how does price react when it touches this MA. Now the first thing that has to happen is it's got to touch, and we're looking at this example right here, this candle. The one to the left of it doesn't actually touch the MA, so we actually have to have price at the same or lower than this MA. So this case, this fits the bill. Once that happens, we need to see that the last time price touched this MA was over 15 candles ago. So this is the touch candle, and we'll count backwards to the left, and we need it to be at least 15. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And this is the 15th. That's perfect. Hit it 16, 17, and it actually touches on the 18th. So we want it to be touched on more than the 15th. Okay, and this one touched on the 18th, so perfect. That lines up. So now we have the 15 previous candles back that it touched the MA. It now touches it here, and it closes above. Now we expect this as a bounce. We're expecting this to be support. And in this case, if we got long on the next candle, we could have took 12 pips, let's say 10 pips, without much trouble. And if we put our stop just below that previous candle, we would have been maybe 5-6 pips. So 2-to-1 ratio in our favor, which is great. And if you were looking for this previous high, which was about 29 pips, give or take, we probably would have put our stop to break even when the price came back down against us, if we were looking for that bigger target. So you either made 10 pips or you got flat. So that's alright. Now ideally this candle, we'd like to have seen longer wick, like that, or something to that effect. It might not have to be that exaggerated, but something like that. That's kind of the ideal setup as far as pardon me, as far as showing us that that's real support, where it breaks down but it doesn't, then it closes back up above, and that gives us a real indication to go long. Now if we look to the left here, we see another example of how does price react when it gets to this MA. And this is an equally good sign as well. It blasts right through it. It doesn't always have to show that there's support there. Okay, now we're expecting this to show some resistance. It doesn't. I mean, that's almost a full candle, blasts right through, and then continues on. So what we would do is we would see that price touched here. We'd count back 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So obviously none of these candles, when did it touch? Quite a while ago. Yeah, so that's okay, that's fine. We don't even have to go back that far. So we know it's done at least 15 candles since the last time it touched. It's probably done about 30, and so we're looking for a trade. And in this case, our trade is going to be long, based on the fact that it blows right through and closes above. Okay, so it blew right through that resistance. And let's say we get long on the open of that next candle, and we put our stop below. You could either put your stop below the MA, which would be about, let's say, 10 pips, or below the previous candle, which would be about 17 pips. So if that's the case, we want to at least do 1-to-1, and we could get our 17 pips right there. We could get 29, let's say, for argument's sake. So again, that's a nice way to see how what happens when price gets to that MA. Okay, so in this case, it touches. Now what happens? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that one doesn't count because it was 10 ago. That doesn't sound right, 10 ago, but you know what I mean. It's 10. The 10 candles previously it touched. Well, it has to be more than 15 candles, 15 or more, pardon me. So that one, this wouldn't be a trade. We wouldn't look for a bounce and go higher here. And then it just kind of chops back and forth. Okay. Crosses over, crosses over, crosses over. So that's why we have that 15 previous candles in place to make sure that we're not just flip-flopping back and forth on the other side of that. And that gives this MA more, it makes it more valid. You know, when you have a few more candles, like for that 15 candles back that it crossed previously, it gives it more support, more resistance kind of thing. But again, in this case, it didn't matter. It just blew right through it. And it's two opposite trades, but we're still using that MA. Here we're seeing it as support. Here we're seeing it as failed resistance. And we'll jump on that horse and just keep riding it. Because it didn't even look at this. You know, it just plowed right through. The MA is here. You know, about 10 pips. It closed 10 pips higher than the MA. And it didn't even, like, it's not even close and almost at its high. So a little pullback on this, you would have sat through a little pain if you got in the open, but that's fine. I mean, that's still a great trade. Risk reward would have paid off, you know, huge. So that's 15-minute chart. I got 6 minutes. I got 4 minutes left here before I'm gonna have to shut this down. So I'll be quick. So here's a 10 pip chart, and same thing. You know, and I put the stochastics, and you can put the stochastics on the 15-minute too. I have them there. Okay, just as an extra guide that says, okay, it touched. We're below the 20 here. It's a good chance it's oversold here. We're going to get a bounce. Those two things line up, we can go long. And same thing here on the 10 pip range chart. It touches here. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yep. So, you know, we can go long here. You know, and if we wait for the cross to happen, we'd be going long on this candle. You know, there's tons of 84 pips. And if we put our stop down here, what's that? 13, 12, 13 pips, 15 pips, let's say, max. Again, you know, that risk reward is always in our favor, and that MA, it's a strong little beast. Now I know I'm going to get emails saying, well, I used the 80 MA and I used the 93.5 MA and etc. etc. And that's cool. I'm not saying change what you're doing or only use the 110 exponential. You know, play around, try and find one that you're comfortable with and trade it. You know, you can actually have a system just based on using an MA as support and resistance, and it's kind of cool, and it's a very handy thing. So that's it for now, guys. What's tomorrow's Friday? I'm going to be traveling a bit tomorrow, so I don't know if I'll have a Q&A. I'll try and get one done in the morning. If not, have a good weekend. Talk to you soon.